Timothy Oguntayo is the Group Chief Executive Officer, Managing Director of Skye Bank, one of Nigeria's commercial lenders listed also on the market. Is live to us here in the studio, bright and early, Monday, the first trading day of the week. Good morning.
Good morning.
Thank you very much. So we appreciate your time. Let's take this conversation from the last monetary policy announcement by the central bank and says, look, we're going to cut the CRR, we're cutting the MPR. However, we would want banks to transmit this money into the solid minerals, agriculture, power, and one or two other sectors. Give us your view about this statement.
Thank you very much. At the last MPC, the committee reduced the CRR to 20% from 25%, and the MPR to 11% from 13%. The intention is to inject liquidity into the system. But at the same time, you have to control the way you channel the liquidity into the system so that you don't overheat the present inflationary trend in the economy. And from what we know is that we cannot continue to be an import-dependent country. We must improve on our productive base. We must improve on our export earning capacity. How do we do this? By taking these funds that have been released technically to the banks and channeling them to the real sector of the economy, i.e., you want a new manufacturing plant, you want to produce the real sector of the economy, as opposed to importing goods made in other countries. If you do more production here, the tendency is that we will consume less foreign exchange, which we don't have. So it's a welcome development. If you put more money in solid minerals, you are going to be generating foreign exchange. And that will also help to boost the external reserve of the country and strengthen our naira. You and I know what has happened to the exchange rate.
The central bank governor says the last CRR, cash reserve ratio haircut, you banks did not transmit it to the real economy. True or false?
Well, if that is, if you are quoting the CBN, I would not say false. All right, but it's a mix.
What happens really?
Now, a bank serves an array of customers. You serve importers, you serve exporters, you serve people that are involved in distributive trade within the economy. So it depends on the situation of each bank and what was the demand in that bank. So it may not be easy to put a general statement as to how the additional liquidity was utilized. But CBN sitting on top of everybody will have a holistic view of what happened to that extra liquidity.
Folks are really keen about infrastructure financing in Nigeria. How can you banks support the government? We need to fix the Lagos Ibadan highway, which is just in front of us here. As many as we need to fund the second Niger bridge. We need to fund power plants. We need to fund new railway lines and things like that. What can you banks do in this regard? The major business of banks is to intermediate between the surplus unit, the people who have money to save, and those who want to borrow. So that's the major job of a bank. And what banks do is to gather deposits and lend to ventures. Infrastructure is a different aspect of lending. Infrastructure lending generally requires long-term funding. If you look at the deposit structure of commercial bank, it's not that long. However, commercial banks can provide the bridge finance to start off. But that will not be the ultimate source of funding for infrastructure development, because we must get it right. We should avoid mismatch of funding. The ultimate source of funding for infrastructure will be long-term funding, i.e. pension funds, which is a lot of funds in the system today. People that have concession, most concessions run for about 25 years. And that is because the payback period is not expected to be 5 years, 10 years. It can be as long as 20, 25 years. And they cannot afford to borrow short. If they borrow from commercial bank, it will be borrowing short to finance long-term assets. So commercial bank can bring some bridge financing arrangement in place, but that financing must be quickly refinanced from long-term sources of funds, capital market, bonds, and even using the partial guarantee scheme of the international organizations like IFC, World Bank to raise money internationally. That's where the ultimate source of funding for infrastructure will come from. Government cannot continue to budget for infrastructure because of competing demand for the little resources available. So people that are, I'm speaking from the point of view that we are going to do most of this infrastructure on PPP basis. And that people that get concession will be people with credibility who have the capacity to draw investors to put money into those infrastructure projects.
Let's talk about agriculture. Let's move the conversation to agriculture. Agriculture is not a bit of brick and mortar, like roads, bridges, rail lines, and shipyards, what have you, gas facilities and all that. So agriculture seems to be a little bit easier.
Yeah.
Yeah, so how much has been done in that space?
You know, working with the Central Bank of Nigeria a couple of years from now, CBN has introduced various schemes. We have the Commercial Agri Credit Scheme, whereby banks are able to access funding on behalf of their customers to put on cash crops, annual crops, livestock, and so on and so forth. And a lot of that has taken off in the system today. I don't have the statistics here, but I think from about 4 years to now, we've seen substantial growth in lending to agric. And we need to continue to do that because apart from feeding ourselves, it also generates a lot of employment. And last month, the CBN with the federal government launched the Farmers Agro Scheme in the north, which is a major project which every bank is supposed to key into and support. And we have this replicated in a number of states in the country also, apart from the north, depending on the geography and the weather in each zone of the economy.
Okay, you hinted about budgeting for infrastructure, what have you now. So let's talk about the budget. The government has been borrowing aggressively from you banks, well, pension funds and everybody else in 2015. So we've seen the supplementary budget and we've seen the main budget for 2015. Now, 2016 budget size is expected to be almost 100% above 2014 and 2015 levels. What's your view about the size of the 2016 budget expectation? What do you think the implications will be for you commercial banks?
Well, we've heard about what you said about this budget size being about 8 trillion compared to 4.4 trillion last year. That means the government has to borrow to fund the shortfall from its income. That provides opportunity for commercial banks to lend. But I also believe that some of this will also be in form of bringing in foreign partnership. The president was in South Africa last week to talk about Chinese and the railway projects. That will be part of what we are talking about in the budget. There will be so many ways, like we talked about the PPP for infrastructure, like we talked about the Ibadan-Lagos Expressway, you talk about power plants that we need to bring to the table. These are very key to the sustenance of the economy because we must get the infrastructure right, even for the productive capacity of the company to be, of the economy to be sustainable. So the banks will have opportunity to lend to government, but I think in this era it will be in a controlled and productive manner.
One of the contentious issues that's taking a lot of space in terms of discussion has to do with the petrol subsidies. How do you think the president should decide? If he calls you and says, well, Mr. Oguntayo, come into my office, the villa, how do you think I should decide? Keep the subsidy or remove it?
Now we have limited resources. We have competing needs. And we also know that this control pricing that we do today
is only obtainable in few cities in the country. If you go outside of Lagos, Abuja, in most states, petrol is sold, or petroleum product is sold far above the control prices. So the question is, who is benefiting from the subsidy? So my view is, as much as practicable, if not completely eliminated, it should be reduced.
Okay, we'll ask a few more questions after this. Let's take a break. Timothy Oguntayo, the Group CEO at Skye Bank Nigeria. Let's come back with the conversation on the banking industry.